Jim is the managing director of a company and earns a basic salary in 2020-21 of £225,000. No personal allowance available for this person. That's first thing comes into my head. The second thing comes into my head that Jim would be paying 20%, 40%, and 45%. So all three basic rates of bands on his non-saving income. He receives benefits from the company during the year as follows. He is provided with the use of a company house which has an annual value of 9,750. So that is the cost, that is the taxable benefit plus, which cost his employer £345,000 in 2017. Less than 6 years, so this value will be taken instead of market value. 9750 is our base rate benefit, plus we will add 345 minus 75 unless there are some additional costs. So let's see. Jim makes no contribution towards the cost of the house or towards its running cost, which costs the company £3,450. So that these are also additional expenses. So we do, and which will be added as a benefit. The company has also furnished the house at a cost of $5,500. So with assets, these are the assets which are loaned to Jim, and we do multiply them by 20% to get the taxable benefit. So that's what we are going to do with this amount. Jim occupation of the house is not job related. If it's job related, then the total benefit of ancillary services, so all these all the furniture and all the maintenance costs would not exceed 10% of Jim's salary. Because this is not job related, so we don't have to worry about that piece of information in this case. He is provided with a petrol engine car, so if it's diesel, it's going to be plus 4%. It's not diesel, so that's what we are looking at. And what else we have? We have so he's provided with a petrol engine company car which had the list price when new of 45,000. I used that figure in the previous example. And the car was registered in February 2020. So the rates are different if the car was registered after 6th of April 2020. The charge is 2% less. So taxman is being generous after 6th April 2020. Before it would be more. So it will be more now. And has an emission rating of 103 gram per kilometer. So the rule for the cars are that if it's before April 6th April 2020, up to 75 grams, the percentage is 20%, and then we add another 1% for every 5% increase, 5 grams increase, not 5%. He is provided with a company loan of 50K on which he is charged interest at 0.5% per annum. So the official rate is 2.25. So the difference will be added as a benefit in kind for Jim's income. Calculate Jim's taxable benefit in 2020 and 21. The official rate of interest is 2.25%. We are not being asked to calculate the total tax payable or the total income of Jim. We are only being asked to calculate taxable benefits, just benefits. Okay, so that's one thing which you need to keep in mind. And the first item on the benefits is house, company house. The annual value of the house is 9,750. So that's our starting point. That would be added as a benefit. If the house would if the house were less than 75K, then that would be it. We will move on to the next bit of the benefit. But in this case, the house has value of more than 75,000, so we have to calculate the additional element as well. So that element is calculated by taking the cost to the employer, 345,000 minus 75,000 times the official rate of interest, 2.25%. And this would give us the additional benefit of 6070. Okay. So the total benefit of the house would be these two values, $6070 plus 9750. So that is the house. So Jim's no contribution to the house or towards running costs, which cost the company 3450 in 2021. So running costs are 3450, no calculations required in this case, and that we have a furniture or furnished house. That is a benefit. The value was the cost was 28,500. This is just like assets loaned to an employee. So the rate is 20% of the value. So 28,500 times 0.2, which is 20%, and we get 5700. Next, what do we have? We have a car, which is the cost was 45,000, and the emissions were 103 gram. So for the motor car or just car, what we have two pieces of information. One, the list price is 45,000. That would be needed, and then this needs to be multiplied with the percentage. If it's a 75 grams or less, then the data is given in the table in the book. That's easy. However, up to 75 gram, if a car is 75 gram, then you pay 20%. You multiply the list price with 20%. So we already have 20%. Then we get the difference between the actual 103 minus 75, because you've already taken for 75 grams, which is 20, and this difference would be 28. We actually rounded down. So actually, we should do round down. We round down in this case. If it's 104, 3, 2, 1, we round it down. Okay, we never round it up in this case. Taxman is generous in these cases. So the difference is 25. And we divide this difference by 5. Why 5? Because for every gram of extra emission, we get, for every 5 gram of extra emission, we add 1% to it. So that will give us 25%. Let's just do the maths. I have 5.2, it should come 25. So there's a problem with the formula. Yeah. So 25 minus 5, let's just do 25%. So now you multiply 45,000 with 45,000. and get an amount of car benefit. I should write down as car benefit. Then we have a fuel benefit, which is the same percentage, and multiply that with 24,500 times 25%. So we get 24,500 times 0.25, and that is the fuel benefit. And the last item would be our company loan, £50,000. So they call them beneficial loans. So the loan, the amount is 50,000, and it should be multiplied with whole 2.25. Or 5, no, not whole 2.25. There is a 5%, 0.5% interest which is being charged. So what we'll do, we do 2.25 minus 0.05. 2.25% minus 0.5%. That would give us 2.25%, and 50,000 times 2.20 is basically 0.022. So we multiply with this, and we get a loan of 50,000, 875. So I'm getting a different figure for some reason. What is the information? Let's have it. He is provided with a company loan of 50k, and which is charged interest at 0.5% per annum. So our maths must be incorrect. 2.25. Oh yeah, it's not 0.05, it's 0.05. So this gives us, let's do the math here, 2.25 minus 0.5. That gives us 0.175. So I'll just change it to 175. And the answer is 875. So these are the total benefits he is getting. Let's just total them. And we have 43,225. The question ends here. However, we can simply have a total taxable income. So salary is 225,000 pounds. So the taxable, the total income and taxable income would be same, because he doesn't have any personal allowance left. So this plus this and this one, and which is the taxable income. So what we have to do, this is not part of the question, I'm just explaining what will be done. Then the first 37,500 will be charged at 20%, that would give us 7,500. Then the next 112,500 will be charged at 45%. This would give us 40%, sorry, this would give us 45,000, and the balance between the total amount minus 150k will be multiplied with 0.45. I should have done that here. And the total taxable. 105,000. See, that is going to be the total cash, but that's not part of the answer. I guess that's all from me. What I will be doing, I will be uploading the answer to these questions 7.5, 7.6, 8.4, and 8.5 on Friday. You should highly recommend it. Write down the discussive points, which would help you to remember the key points we have covered so far.